Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex market outlook for the week of January the 4th, 2010. Now with that said, I want to wish everybody a happy new year, and we're going to get started right off with the US dollar index. Now looking at the US dollar index, we can see that we have a clear buy signal from vantage point with the 3-day and the 8-day crossing over the 18-day. That signal remains in place despite normal market volatility moving back between 77.20 and 88.50 for most of the week. However, again, the buy signal remains in play. We've closed at 77.86. Our key levels of support are 77.86, 77.24, and 77.20 being the critical level of support. Now, only a sustained break of 77.20 will take the pressure off the top side, and I anticipate the US dollar index moving higher. This translates into US dollar buying in the Forex market, and we always want to keep that into consideration and make sure that we monitor the US dollar index very closely. Now, again, looking at seasonal patterns that I've talked about over the last several months, we have a buy signal from vantage point almost the exact same time last year. The US dollar strengthened there for about 3 months thereafter. So again, we're going to be looking for the further US dollar strength, likely to last into March and April. Now, looking at the other drivers of the foreign exchange market would of course be crude oil. Now, crude oil, again, we have a crossover from vantage point. We have a fresh crossover from them. However, the 80 level presents very strong resistance on Brent crude. I anticipate this moving lower and the US dollar extending higher, why crude starts to actually taper off some bit. Now again, it's very difficult for higher crude oil prices and the global economic recovery to grab any kind of footing as long as crude oil continues to move higher. So from a fundamental standpoint, that's why I anticipate it's crude oil extension higher is going at the present time is likely to be somewhat limited. Now, looking at the price of gold, we can see that we have the crossover from vantage point that's taken place around the 1150 area. Now, critical levels of resistance now are $1,112.60, 1101, and 1096.3. We've closed at 1096.2. I anticipate a retest of the $1,112 range, and then I also anticipate it will sell off. Now, this is a short and medium term. The longer term outlook on gold, still somewhat undecided on that, but it certainly does appear that it intends to move higher. So that's our outlook on our commodities that are our main commodity drivers. Now, having a quick look at the individual futures of other main drivers, specifically now the euro, we can see 144.91 is a critical level of resistance, 143.76, 143.46 with a close of 143.25. This suggests that the Euro FX futures contracts will again come under selling pressure to begin the year, and that's likely to last again for probably a couple of months. But again, that's something we'll monitor closely. But for now, we do have a very strong sell signal, from vantage point that's taken place all the way up in this 149.50 area. Highly accurate call. We have no indicator here suggesting at the present time that the euro is going to gain any strength. Very important to keep that into consideration when trading not only the euro-US pair but also the euro crosses. Now, going into the Japanese yen, vantage point also very accurate. We called that this was the yen futures would move lower. That's now happened. I also anticipate the yen now to weaken even further now that we've cleared this 92.40 area on the US-Japan currency pair. This suggests that the yen futures and the yen crosses will all continue to, the yen will weaken right across the board to start 2010. So now with that, we're going to move into our currency pairs now. We're going to start the week with the US Canadian. US Canadian, very frustrating to trade this pair. We can see we're basically running a range of about between 104 and 108. We dipped a little bit below that this week right here. We can see this individual candlestick at 103.60, but to be perfectly honest, the range is still intact. 105.40 is now critical resistance, 105.18, 105.10. However, I anticipate the 105.40 could get taken out fairly early in the new year, particularly if I'm correct and crude moves lower and the $80 a barrel mark holds, then obviously the Canadian dollar would come under some pressure. However, again, we'll wait and see how that transpires, but for now, our critical level of resistance, 105.40, sustained break of that takes the pressure, the immediate pressure off the downside, and would likely see us retest the 107, 108 area. Now, with the crosses, I'm not going to spend much time with the crosses this week. My focus will be on the majors to start the year. US Japan, we have 90.72, 91.72, and 92.48 are our three levels of support. We've identified these levels of support based on the triple EMA crossover that's taken place at just about the 88.50, 88.70 area. We still have a good strong buy signal here from vantage point